And welcome, this is Mary Ellen McGonagle with your Friday afternoon weekly Edge show for November 3rd. Today, as usual, we're going to take a look at these broader markets, really bullish activity shaping up and a new uptrend now emerging in those broader market indices. We'll look at that. And then also beyond, you want to be aware of where that relative outperformance is taking place, always with an eye toward areas that you will want to participate in. Also, some of that headline news that drove price action last week, and then viewer question of the week. And the question is all about how you can tell if a stock will continue to rally after experiencing a gap up in response to strong earnings. So take a look at some of these news from last week. First up, earlier in the week, consumer confidence did fall amid inflation and high interest rate fears. And this type of negative news relative to sentiment among consumers or the economy is, as always, generally good news for the economy. Is generally good news for the stock market because it will help bolster the case for the fact that the Federal Reserve may be finished with their interest rate hike campaign. On Wednesday, ADP report came out, and it did show that the private labor market was slowing in October. So again, weak news, good for the markets. We did see ISM factory orders drop below 50, and a contraction taking shape there as well. On Wednesday, news that the Fed unanimously agreed to keep interest rates steady. That's not a big surprise, but certainly was good for the markets. And in response, we did see volatility and interest rates pull back. This is what we want to see. It's a positive backdrop for the markets. On Friday, the U.S. employment numbers for October came out, and we did see a very modest number of new jobs added. However, the unemployment rate rose. So this is further confirmation that we may see a cooling off of this jobs data. Again, good news for that interest rate scenario where we want these rates to pull back. Fed Chair Powell next week has 2 speaking engagements as well as several other Fed governors, so we're going to be closely looking at those comments simply because the economic calendar is rather light next week. So from here, let's go ahead and take a look at those markets. Where did we close for the week? And here we are. This is a daily price chart of the S&P 500. I did highlight characteristics from prior downtrend or pullback reversals at the beginning of this year and then also in March. Of note is the fact that the S&P at that time broke above each of its moving averages, and we also saw the RSI turn positive and the faster moving stochastics momentum indicator also turning positive. So let's go ahead and fast forward to this week's price action. The market's up 6%, and we can see in response that it was enough to push the S&P back above each of these moving averages. We also now have an RSI in positive territory, and likewise with the stochastics, and that is a bullish backdrop for a new uptrend. From here, we can take a quick look at the NASDAQ, and we'll see very similar metrics where this index broke back above each of these moving averages and now has positive momentum. Good news there. The NASDAQ up a little bit more than the S&P 500, up 6.6. I'll share with you what drove that price action. Now, here we are with the underlying 11 sectors in the S&P 500. First up here is the fact that I added an RSI indicator and sorted this 2-month daily price chart view in descending order, all about understanding or getting in front of where your potential relative outperformance is shaping up. And take a look. Technology up here at the forefront. It was up in line with the broader markets, or the NASDAQ, 6.6%, but regaining its uptrend with that RSI in positive territory. MACD poised to turn positive. Next segment, I'll share with you where in technology that strength is shaping up. Biggest mover last week, REIT stocks, and these are names that fare well in a lowering interest rate environment. And we can see this big continuation gap up. Some of these companies are also coming in with numbers ahead of estimates, and we can see the positive momentum shift taking place there. Next up, the next area is financials, and also reversing their downtrend with a move above the moving averages and positive momentum shaping up. One of the drivers of this move into financials is a sharp rally in bank stocks. As these rates are lower, they anticipate more loan activity, which will improve their profit margins. So down here in this lower quartile, we can see several areas that are still relatively struggling, and healthcare would be one of them, up only 3.5%. You can see that this move higher is constructive, but not quite enough to push it into a positive momentum backdrop. From here, I'm going to share with you several areas of the market that can be really impactful. I use these ETFs that help signal moves into particular areas, a 2-month daily price chart view, and let's take a look. This is XRT, the retail ETF, and it was up 7.2%. This is all about really these companies that are coming in with numbers ahead of estimates, and they are being very positively moving higher in response. Positive RSI, nice black line up through the red, MACD crossover, and from here other areas up here in the forefront that are helping to move technology software. IGV is the ETF, up 6.3%, back into mostly bullish. We can see the RSI in positive territory, a close above that 50-day, not quite there yet with the MACD, but nice positive price action. Also semiconductors just at that 50-day, but we do have a positive RSI. Good news there, and then a MACD black line up through the red, which signals a new potential uptrend. So those are your stronger areas within technology. Now, down here, I do want to share with you this view of the yield on the 10-year. We got down to 4.6%, and that's great news. Falling interest rates are good, certainly for growth stocks and other areas of the broader markets. And also declining is that volatility index, VIX. Down here, we can see it's below 15, and below 16 really is a good metric and a bias, because it indicates that investor confidence as far as the markets, the uncertainty is beginning to recede. So we do have a good backdrop for a nice continuation rally. From here, I did want to share with you a view of the equal weighted S&P 500. In other words, it's not just those mega cap names that are helping the broader markets fare well, and that's good news. We want to see more areas and more stocks participate to help with the concept of a nice continuation rally. Now, from here, I talked about names that gap up either in response to earnings or earnings upcoming, and how one way you can tell if there is further near-term upside. We'll begin with Uber. Now, bear in mind they are due to report their earnings next Wednesday, so you will want to have that in the back of your mind. But let's take a look at a daily chart of Uber. You can see this gap up above the moving averages, nice move into positive territory. The stock now in a new uptrend, poised for a $49 base breakout, nice heavy volume. So we did have that gap up on Thursday, and as always, you would be on the lookout for a potential further increase in price or a pullback. So one way that you can help define what may take shape is to go ahead over to an intraday chart. This is a 1 hour, 60-minute chart, and I'll share with you some of these metrics that can be quite helpful. Here's that gap up on Thursday, and you can see the stock did not give back anything as far as that gap up rally. And also that your metrics here with this RSI remained in positive territory, likewise with the MACD. So you can stay with the stock, and then we have a nice secondary rally up another 2 3/4% today. So looking at a longer term, more mature downtrend reversal, we can take a look at Nike, and they came out with numbers late September. Gap up, and a continuation rally. We can see this is a pullback in line with the markets. Again, we're going to take a look at that 1 hour price chart as your guide for longer than just another day or two. So on this hourly price chart, here we are with that gap up on earnings. The stock did pull back, but take a look. It found support at that 5 and 13 hour simple moving average. Your RSI remained in positive territory. And this is that pullback that took place in line with the broader markets. Now, if you were a super short-term investor, as that RSI trended below 50, the price below the moving average, you may want to lock in profits here and take a look. We'd have had these nice continuation rallies. So using these metrics, the RSI, the MACD remained in positive territory during these pullbacks, are really going to be helpful if you are a swing trader, shorter term focus. I would use that hourly chart as your guide. That's it for this week, everyone. Have a great weekend. I'll look for you here again next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.